Big shifts in market dynamic and moves are set to unfold, guys. I see so many red flags in the market, and I have a lot of information which I want to share to you to gain exclusive access to this, and also join me on a fun, personal, small account challenge of taking $500 up towards potentially a $5,000 account. Click the link below to apply.
I needed to recharge, and it's perfect timing. It's perfect timing because the warning signs that I'm getting, the various indicators and the flags that are showing up across the market right now, thank goodness I'm recharged. I need to be finger on the pulse because there's a lot of value and a lot of shit. As I said yesterday, there's a lot of shit to speak about and a lot of shit that's gonna happen. So guys, where do I start off? First things first, remember those weeks ago where I spoke about and we covered ground on the fact that Americans, the rising number of Americans that are maxing out their credit cards is, and this is I'm gonna save this for a whole different video, guys, okay? I've got a really serious amount of shit, I'm gonna say it, shit, that I need to share with you, right? But I see something, okay? I see something happening in the economy, right? Because there's a lot of data where you can see Americans are maxing the hell out of their credit cards. These guys are lunatics, man. And at some point, they're gonna feel it. Okay, things are going to hit the fan. Is getting very unstable, is worrying. Okay, that was one flag that I noted those many weeks ago. Okay, now I'm going to show you something else in a moment, but just want to recast your memory and your thinking around that. If we've got a number of Americans maxing out their credit cards, right? Okay, and bear in mind this is short-term debt. Okay, with a credit card, that's really classified as short-term debt because typically you spend on that credit card and then you should be paying it back, right, to avoid the interest occurred. Now, remember, in this current environment, we are in a period of high interest rates. And right now, particularly if we look at the United States, in this case I'm talking about with those maxing out of credit cards, it's a high interest rate environment, and the Fed, the central bank of the United States, are not looking to cut rates yet because we've got the situation of sticky inflation, okay? Where all these Americans are maxing out, still spending on their credit cards, right? Of course, that's inflationary, isn't it? Okay, if we've got them maxing out their credit cards, that's inflationary. They're still spending money, right? So all these businesses that have been offering, these goods and services that they're spending to max out their credit cards are keeping their prices high. Inflation hasn't been coming down enough for the Federal Reserve to be like, okay, we can now start cutting rates. Because remember, when we cut rates, what does that do? That lowers people's costs. So they don't want to do that too prematurely. Why? If they do that too prematurely, what do you think is going to happen to inflation? Inflation starts picking up again because we get crazy people think, oh, my costs have gone down, I'm going to start spending again. Yes, I'm not paying as much interest on my loans, on my mortgages, on my outstanding credit card balances, which I'm maxing out. I've got more cash to go and spend even more. So then inflation rises again. So these times right now are crazy. They're a sensitive one for the FOMC to have to deal with, and other major central banks as well, but particularly we're talking about the FOMC right now. Now let me share my screen. Okay, let me share my screen, and we've got some shit to talk about. Coupled with what I said, and those, it's funny because we were speaking about this many weeks before all the news wires, you see major news wires started running reports about the maxing out of credit cards, right? I was looking at this data before it was getting publicized. And now just coupled with that, look what we're having here, obviously posted in Yahoo Finance source Benzinga. They say this is coming out of the Fed. The Fed warns against rising delinquency rates, calls it a leading indicator that things are about to get worse. So Austin Goolsbee, of the FOMC, he highlighted that consumer delinquencies are among the most worrisome economic indicators currently being monitored. All right. He said if the delinquency rate of the consumer starts rising, that is often seen as a leading indicator that things are about to get worse. So if you look at recent figures from the Federal Reserve published last week, confirm the fears showing that the aggregate delinquency rates have increased, with a 3.2% of outstanding debt in some stage of delinquency as of the end of March. Now, these are rising, bear in mind, okay? People are failing, on their debt right now, and this is on a consumer level. What happens when this happens to businesses? Bear in mind, you see businesses, right? Businesses also have debt. Businesses have outstanding debt, right? They have business loans, big business loans, right? They're taking out these loans to try and boost infrastructure, to try and boost out their business operations. And they still have to pay higher interest. You remember why? If you look at stocks, right? I want to put this on a naked chart a moment. Okay. Look at the downside that we're seeing with Dow Jones there, for example. Look at that big chunky drop over the last couple of weeks, potential top there. SPX, we're starting to see a massive slowdown. Okay. And this is because, goes back to what I was saying about higher interest rates for longer. Remember, if rates are higher, this means businesses are paying out more money still. They're paying out higher interest, just like the consumer. Do you understand? So where they may not be getting those cuts, they want those cuts now. They wanted them yesterday. They wanted them months ago. Okay, businesses wanted them months ago, but they're still not getting any cuts so far in 2024. We're almost at the middle of the year, right? So this is very worrisome for stocks as well, this current environment. So stocks are coming under some pressure. Right, there's a lot there obviously to digest and a lot more that we can go into detail, which we will do so over the coming weeks. What I'm going to do is set up a dedicated channel around this, guys, because these are very interesting times that I want us to have finger on the pulse and just be speaking about all of these things that you're seeing here that we went over, the maxing out the credit cards, the this delinquency rate, right, which the rising delinquency rate that the Fed are observing here and publicizing. This is all worrying stuff, and I would just want us to have the finger on the pulse and look at all these leading indicators, all these worrying reports, and we'll start filtering them in a specific channel, okay, within the community as part of the TFTC, okay, and look at how we can capitalize on this, okay, because we don't want to be prey. We want to be the predator. Let that sink in. We do not want to be the prey where we get fall behind and our wealth starts to deteriorate and we start to have issues. We don't want that. Okay, I want everybody as part of the TFTC. Okay, and as part of this specific channel that we set up, focused on this big shift in market dynamics. Okay, these big shifts in market conditions that we have our finger on the pulse on that front. So guys, I hope you found this video valuable. This is one of many red flags that are appearing in the market. And as I say, I'm going to be breaking that down exclusively in a group, what this all means and how we could look at potentially capitalizing on that. And as I said, I'm going to be running a fun-free personal challenge where I'm going to try and take $500 a small account and growing that to $5,000. If you want to join me on this fun challenge and obviously gain access to all this knowledge and information, then make sure you apply via the link below. Other than that, please do smash that subscribe button up. I want you to smash it up with litness. Like the button, it should be a lit button. Stay lit, stay blessed, let's get it.